Hello, welcome guys to Global SMC Trading. So today we are going to learn about smart money concept. I know that a lot of you you have heard about this word smart money, but you are really wondering what smart money really it is. By definition, we are saying smart money trading is whereby we have these large institutions or the big banks that are moving the market to their specific orders. So usually, how do we see the smart man traders? We see them with these impulsive moves. You can see from here we have this very big impulsive move, and if we go for it again on the market, we see these very big impulsive moves. This is how we see that the people who are moving these markets are the ones that we call smart man traders. These are the ones that we call smart man traders. So now let me explain to you how you go over it. Let's say you are on forex market, you want to trade the smart money concept. So the smart money concept now, personally I use what we call a 3 strategy setup, which is a strategy that I'm going to teach you guys for years and years, and this is the strategy that you are going to be using forever. So what are we saying now? The first thing, we have what we call a structure. We have what you call a structure. The second thing, we have what we call the supply and demand, and the third thing, we have what we call confirmation, the confirmation. So this confirmation, usually we use what we call a wyckoff strategy, which is something that we are going to be talking about as we are going. But for the meantime, we want to explain actually what is smart man trading, right? So as you can see, let me try to zoom in this so that you guys can see. Right now, I said smart man trading, the way how I trade it, or the way how smart man traders trade this concept, they use this 3-step strategy. So now the question is, how do we implement this, right? So let's start from the structure. Let's start from the first one, which is the structure. How do we define the structure now? We know that when the market is moving, the market moves forming higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. This is how the market moves basically. But when it comes to the real market, it doesn't actually move like this, but still it is there. As you can see from here, the market doesn't move exactly like this, but if you really understand the market structure, you can see that it's still the same, but for us, we don't consider this noise. This is what we call noise, or these are fractal movement that the market are just doing, like this kind of a thing. We call this like a noise which the market is moving, which is something that we really don't mind about. So now let's proceed to what I was talking about. So I was saying market moves like this, making higher lows, higher highs, higher lows. So what happens now when the market is moving like this? Whenever it's moving like this, this is a structure that we are talking about. Now let's imply this second concept that we said, supply and demand. Now how do we see supply and demand, right? So here, for instance, right, for us to see what is a supply or demand zone, a supply or a demand zone is a last zone before this momentum movement. So what are we saying? If we check from this market structure, right, let me draw it beside so that I don't scrape these things, right? So we are saying higher highs, higher lows, then the market is coming to break this zone, then it is coming to our demand, breaking the structure again. So what are we saying now? This is what we call a supply or a demand zone. The last zone, okay, the last zone before this impulsive move. So which one are we calling the impulsive move? This is what we are calling the what we are calling the impulsive move. Like this move from this low to this high is the one that you are calling the impulsive move. So for instance, let's take from these charts, which one are we calling the impulsive move? For instance, this move, let's say this move going high like this is the one that you are calling the impulsive move, which is the same as the move that is here. So I'm going to show you the structure here first, so that when you understand this, then we go to the actual market. So now what happens is, now as the market is moving like this, as you can see, as the market is moving like this, right, the market goes and forms its high, and it comes back to tap this supply or demand zone. So when it comes to tap this supply and demand zone, that's when again we use our concept of wyckoff, or something that we call a confirmation, right? This is where we apply our strategy of confirmation, so that we get ourselves involved in this trade. And when we enter this trade, we target the next high. This is the next high or the next liquidity point. This is so we as smartman traders, we use this high as our liquidity zone, or the target, or the take profit, right? So this is basically how smartman trading is. So if you understood what I was saying, we have what you call a structure, we have what you call a supply and demand zone, we have what you call a wyckoff. So to repeat for the last time what I was saying, so I was just saying, when the market is forming these lower lows and lower highs, you're going to see that the market is going to break this structure. It moves from a lower high, lower low, lower high, lower low, going like this. So when it goes like this, forming this impulsive move, it form what you call a break of market structure, which is something that is here, that the market is showing its momentum high to the upside, coming to confirm the market. Then that's where we use our wyckoff strategy now. So basically this is what we call the 3-step strategy. So now let's go to the actual market and use the same concept that I was teaching you, or how to see this 3-step strategy, or this smart money concept strategy, using the real market. So on this market, we can see that is on hourly time frame. So let me take it from 1 month, something that we call a top-down analysis, using the same thing, so that you guys, you understand exactly what I'm trying to say. So from this monthly chart, what do we do now when we are doing this smart money concept? First, we determine what you call a structure, right? What is a structure? It's forming a high low, high, high low, high, high low, high, high low. This is the structure. So to people who really know the basic of structure, you can tell that the price is moving down, or is in a downtrend. Now the step 2 is the one that we find what you call a supply or a demand zone. Now what is a supply or demand zone? So now when we are going downtrend, right, the market moves like this, forming a low, a high, breaking the structure, coming to a demand zone, targeting the next liquidity like this. Okay, I think it's really making sense. This will be our supply and demand zone, and this will be our target, right? So for instance here, let's apply this strategy on this market. We do the same thing like this. This is our supply, this is our supply or demand zone. We can say supply or demand zones, or the point of interest, right? You can see that the market came and tapped this zone and started to to go down. So usually we actually don't use these supply and demand zones like this. This is where we apply the concept of refinement sometimes, but here we just want to view the market as it is, or as it's delivering to the market. But we as traders, we don't usually trade these higher time frames, because if you are to consider the pips from here to here is a lot of money. But as you can see here, our strategy have implied, or it have met our rules. Now we go to the third strategy, which is the confirmation or wyckoff, which is something that we are going to be finding here. So for wyckoff or confirmation, I think I'm going to do another lesson. You check on the channel, the one that I'll be talking exactly about confirmations and wyckoff, right? So now let's go down frame to one day, so that we view the market structure. So what you are supposed to know, guys, this is what I was calling noise. You have to be, when you're viewing the market, you are not supposed to be worried about all these movement, because we call it a noise, or the fractal nature, because the way how the market moves, it moves the same from monthly time frame, daily time frame, 4-hour time frame, 1-hour time frame, 15 minutes time frame, to even 1 minute time frame. The market always moves the same. So now, since we know that the market is in a downtrend, let's use again our strategy. Where is our strategy? Let me try to write it again. We said we have structure, S&D, or supply and demand. I don't want you guys to be confused. It's just like supply and demand. And this is confirmation, the confirmation, which is a topic that you're going to cover on another lesson, right? So here, how do we identify the structure? I told you guys, hello, hi, hello, hi, hello, hi. So where are the smart money traders? The smart money traders are on these moves, these big moves, these big moves. These are the smart money traders that are causing these moves to go as down as this, right? So after identifying the structure, like I told you, after identifying this structure, now what are we looking for? We are looking for a supply or a demand. What is a supply or a demand? A last zone before this impulsive move, right? So this is our supply zone. This last move before this impulsive move, which broke this structure, right? So now I'm going to teach you in the long run how to refine, or how to find sometimes what we call the sniper entries, or the entries that you actually know that if you enter your trade at that position, you won't get too much drawdowns or draw ups. So what are we saying now? Let's refine our supply zone and to this small move. If you check this small move for the structure, I have told you how the structure is going. I think now we can see. So you can see that this candlestick here is the one, this candlestick, this blue candlestick, which is here, that was the last candle before this impulsive move, which is again our supply or demand, or something that we call the point of interest. So now what are we assuming? We are assuming that the market is going to target this point. That's what you are assuming, because the market already is showing that it's going to this side. But guys, what I want you to know about forex trading, the reason why we trade is not that we actually really know where the market is going, but the reason why we trade is, if you have your strategy, or the way how you understand your market, if your strategy presents, what do? You enter into the trade, you present yourself into the trade, then you manage the trade as it's going down. This is something that will really determine that are you the best trader or are you the worst trader. So with time is something that I'm going to be teaching you guys how to manage your trades, or how to enter this trade, right? So after finding this supply or demand zone, that's where we use our confirmation or something that we call wyckoff, which is something that guys I'm going to be teaching you in the long run. Or you check my videos, I'm going to be recording about what's really a wyckoff or how do we enter the trade. But for this video I just wanted to show you what really smart money is. So I think from what you have seen now, this is actually what smart money trading is. You just use this simple strategy, or this simple 3-step strategy, that you are just using the structure, the S&D, the confirmation. You find where the market was making impulsive move. Whenever there is an impulsive move, the smart money traders, if they make this move, what are we saying? We are saying they are stopping people. We know that people who are trading these supply and demand zones, or we have people who are trading like even this trend line. So they'll be trying to stop out all these people so that they take money, because as much as the market is moving, of course this is a game of money, so they are trying also to go with the few, so that the market will always continue to deliver itself. So now I think guys you have understood what really smart money trading is. Smart money trading, if you want to really enjoy smart money trading, you just use this simple 3-step strategy. So I hope guys you understood what smart money trading is. So for me to conclude this video, let me just do a recap of what I was saying. A high, a low, break of market structure, market coming to the supply zone. This is our target, the next supply zone, like this. Let's refine our supply zone like this. This is only a concept that you do when the market is in an uptrend, or when the market is going high. So using our 3-step strategy, this is the market structure, the second, the supply and demand zone, the confirmation. The confirmation is the one that you find in the point of interest, right? Then when the market is going on a downtrend, again we do the same. The market is making lows, highs, lows, breaking the market structure, coming to the point of interest, targeting the next liquidity zone or the next low like this. Where is our supply and demand zone? This is our supply and demand zone. Oh, where is our wyckoff? This is where we get our wyckoff entry. This is only done when the market is going on a downtrend, right? So guys, don't actually claim this or complicate yourself on this. This is how the market moves. So guys, thank you for the video and thank you for watching this. I hope you really enjoy. For those who really want to know more about forex trading, I'm going to be uploading my information, or the information that you're supposed to know. If you want to join other people, you also follow our Instagram page, Facebook page. We also have our WhatsApp group. You just check the information. So guys, thank you. I hope you're going to really enjoy this. This is Global SMC Trading. Bye guys, I'm signing out.